Hi guys, welcome to the Blood Planning channel, and today we're going to be looking at tax deductions for employees that are now working from home. This message is important for employees and employers. Stay tuned, subscribe, and let's get into it.
My name is Brad Pasi, and my 7 years experience as an accountant and wealth advisor has made me realize that people lack a functional relationship with money. I'm here to help.
Important things to realize is, as we carry out this example, you have to be an employee. An employee is somebody that receives at least one income, or typically one income, and that one income is a salary rather than commission or some sort of variable payments. And at the end of the day, you receive an IRP5 of which states the income that you received, and that's pretty much it. For other considerations like people that have side hustles or are experiencing rental income, this situation does not necessarily apply. However, you can apply it. It's just that you need a little bit more, I could say comprehensive tax advice. So if that's your situation, leave me a comment down below and I'll see if I can make a video that can address your situation. But other than that, keep on watching, as this can be a part of your tax planning, because many people are starting to work from home and it's worth your time to understand the lessons that I'm going to talk about in this video. So you work from home right now and you have some expenses that you're incurring, like internet, and obviously you're paying rent and all sorts of operational expenses that you could say if you're not paying them, you won't be able to work efficiently at home. Now, there are certain categories that need to be observed in terms of how you can properly and legally claim expenses so that you can pay less tax or even get a refund. What we're looking at is what we call Section 11. So Section 11 is deductions in a typical sense, whereby if you're carrying on a trade, and mind you, I'm explaining this on a general point of view. I'm not being specific, as I'm trying to make you guys understand a particular point. Section 11 is the expenses that you deduct against income. So if a business or entity makes income, Section 11 are the general expenses that they receive or that they are able to deduct, so that because these expenses are in relation to carry on a trade. Now, many individuals cry and say, hey, we also want a piece of those expenses. However, due to what we call Section 23M, we are unable as individuals to claim expenses, even if they are in relation to your general carrying of a trade. So what does Section 23M say? Section 23M is applicable if the taxpayer is in receipt of remuneration derived from an employment or the holding of an office, unless the remuneration is derived mainly from commission based on sales or turnover. Deductions available to the taxpayer are limited under Section 23M to the deductions listed in this section. As far as home expenses are concerned, the taxpayer will only be able to claim rental, repairs, and expenses incurred in relation to a dwelling house or domestic premises under Sections 11A and D, and wear and tear allowances under Section 11E. So effectively what that is saying is, SARS is trying to be courteous and understanding in terms of the situations of many individuals. As I mentioned before, individuals naturally are restricted from getting any other tax deductions in terms of their trade. In other words, the typical deductions that they're able to get is contributions to their retirement fund, legal fees, and debts arisen during the course of trade, of which, particularly with debt, it's very unlikely for an employer to incur debt, as most of the time employers often find ways to either settle or comprehensively sort out those situations. Now, as Section 23M is giving allowance to Section 11 deductions, there is still a further criteria that needs to be observed, and this is where we go to what we call Section 23B. Section 23B states, an expense must still meet the requirements of Section 23B even though it meets the requirements of Section 11 and is allowed under Section 23M. The requirements of Section 23 23B are as follows. The part of the home in respect of which a claim is submitted must be occupied for the purpose of a trade. Now, what these two bullet points are stating is that in the same way that companies and sole proprietors are able to claim expenses when they are in relation to what they do to produce an income, that rule still applies. Remember, we are talking about SARS trying to include individuals in the process of being also to be able to claim expenses that they incur as they do whatever they do in terms of their employment. Now, that's important to consider, an important point to me. So in other words, Section 11 might be applicable. However, as an individual, you have to move to Section 23M. And if you're still compliant with terms of Section 23M, then you can move into Section 23, of which this is the most important part. Once you're at Section 23B, that's where if you pass the qualification criteria there, that expense can be indeed deducted from your taxable income. Now that you have a little bit of information about what is Section 11, Section 23M, and Section 23B, it's very important to realize that what are the typical home expenses that you're able to deduct based on Section 23B. So in other words, these are the expenses that if you're able to prove that you've indeed paid them, you are almost guaranteed to get an allowance based on these. And these expenses are rent of premises, interest on bond, cost of repairs to the premises, and other expenses in connection with the premises. In addition to those expenses, other typical home office expenditures are the following: phones, stationery, rates and taxes, cleaning, office equipment, and wear and tear. Now, what is wear and tear? Wear and tear is, in accounting terms, we call it depreciation. In general terms, you could say is the cost of using any asset that you may own. With wear and tear, it's very important for you to consult with a professional like us at Bright Planning. Will definitely help you so that you can get the right calculations done and you do not get into trouble with SARS. Now, what is wear and tear? As I was previously explained, wear and tear is basically the value of use that you're applying to any given asset. These assets will be things like a laptop, printer, and any sort of asset that you might need in terms of what you are using in order to perform your job. Now, what happens is those assets, let's say you pay them, you buy a laptop of 10,000, and then according to SARS, you are able to depreciate that over 3 years. So that means you'll be taking 10,000 divided by 3. That should be about 3,333. And every year, you'll be allowed to deduct 3,033 from that amount as a wear and tear allowance. This is excellent because you are boosting the tax deductibility by simply using the asset. Now, this is a really wonderful deduction to consider, especially for individuals who typically will not get this. And most people are not even aware about this. And you can literally just shave off, that percent or 1/3 of your asset value of your taxable income. And this can really boost your journey to getting a tax refund or paying low tax as much as possible. Now let's look at a case study in order to practically apply all the information that I've said right now. Let's consider Lerato, who is an employee earning a salary. Her situation is, before lockdown, she worked at an office premises, like most people. And during lockdown, she was expected to stay at home. And since then, she's been working from home. At this point, in order to successfully apply deductibility of your expenses, remember, they all have to meet Section 11 and Section 23M. And therefore, Section 23B will guide us in order to claim all of these expenses. So the most important thing is all requirements of Section 11 and Section 23M need to be met. So we're going to start off by outlining the expenses which are obvious and you'll be able to receive, because these ones, they do meet the requirements of Section 11 and Section 23M as stated under Section 23B. And these will be the rent, retirement contributions, and the laptop. But the laptop will be in terms of wear and tear. because this is an asset that you own and you're able to get some allowances based on wear and tear or use of these assets. Once again, if you need help, consult asset bar planning and we'll definitely assist. Now, all of these I'm going to mark by green highlight so that you can see that these are the expenses that, in terms of Lerato's case, you're gonna get them straightforward because the Act does not need you to apply any sort of application or reasoning or some sort of formula. Now after that, we're going to look at the expenses that you're going to be denied. You're definitely not going to get them at all. And that one is other living expenses. So this will be expenses like your groceries, just anything personal to you or your family that you are, paying towards living under lockdown conditions or just living in this new normal society. But this hasn't changed. It's been all the same ever since. So this one I'm going to mark in red, living expenses, as these are the expenses that you definitely won't be getting a tax deduction from. Now what we're left with is expenses which under section 23B we are able to get some sort of deduction. It's not guaranteed, but careful consideration needs to be applied. And this is why. Say for instance, we look at internet fees. With internet fees, yes, you can claim that internet fees are for employment reasons, but typically when you have internet, especially at home, your family members will be able to use it for their personal use and such and such. And therefore what that does is it puts a situation whereby you cannot actually claim that internet is purposely used exclusively for work. So in some cases, people do get away with these type of things because remember, our tax system is a disclosure-based system, or voluntary disclosure basis. So you have to be responsible and forthcoming with information in order for it to be processed. So with internet fees and cell phone bills, it's often very difficult to distinguish whether you're using them for private or exclusively for work. Now, in most cases, when this is the case, what you want to do is you want to have a separate phone for business and a separate phone for your private use. That is one way to be able to simplify how you can claim and basically do the things the right way, so that SARS, if they decide to audit you, you are able to conclusively prove that whatever that you're using is indeed for business. Now, if it's mixed, what you can do is go back to your employer and say, employer, I have used up so much in terms of phone bill. Obviously, when you're doing this, you're at the mercy of your employer. They might accept or decline your request. So at the end of the day, if it's possible for you to request a refund, I believe that will be a much easier way. Other than that, you can try the section 23B way, but just know that it's not 100% guaranteed that you could get it, but there is a chance of it. So in other words, let's just say it's 50-50. It's based on the burden of proof. Once again, my tip is have a bill for your personal expenses. In other words, have internet that's specifically geared for your business purposes. Remember, you just have to prove that 50% of it is being used, more than 50% of it is being used for business. So just consider that when you're doing these things, and then you can get your deduction. And then printing plus stationery, this one, it can easily be used or it can easily be categorized as an expense which you can get straightforward, but in some cases some printing can be used for other reasons, personal or the school projects or whatever. But once again, so long as more than 50% of it is used for business, you're able to get it via section 23B. Rates and taxes, this one is quite important because when you pay your monthly rates and taxes, you are paying for the whole premises. Now, in some cases, based on the case studies from SARS, what they say is you have to distinguish the percentage. In other words, you have to prove that a certain section, let's say 20% of your dwelling or your premises or your home premises, is where you are conducting your business operations. Now, that means that 20% of the rates and taxes bill, you're able to claim tax deductions from SARS. If you can prove to SARS that 20% of that dwelling place is exclusively used for business operations, then 20% of the rates and taxes can be deducted towards your taxable income. Now, for me, this is a bit of like a old style way of thinking. I wish SARS could advance a little bit more and start to appreciate what is happening in today's homes. Because at the end of the day, not a lot of people will really go into the consideration of calculating specific percentages and actually having an exclusive place for business. Because at the end of, with the internet of things, people are working anywhere. You could basically be working in your bedroom, you could be working from anywhere. Not everything is office based, because most people are working from their tablets or their phones, whatever the case may be. And for me, this is where SARS would take the opportunity to enhance these rules, to accept that the new normal, besides COVID, just via internet, is that people are actually doing things differently. And as they're doing things differently, some rules are very difficult to apply. Now, that being said, also for electricity and water, the same will apply with the rates and taxes, because at the end of the day, what happens here is you are able to claim based on the percentage or the proportion of your 100% dwelling. In other words, if it's 20% of your dwellings that you're using for your income as an employee, you can use that percentage against whatever your bill is in terms of electricity and water. But once again, burden of proof is totally up to you. And if you can't prove it, if SARS decides to audit you, that's where you run the risk of being denied. But in most cases, this is exactly how you can apply tax rules in order for you to deduct home office expenses. Once again, thanks guys for watching. I really appreciate you taking time to watch this. I really hope that I provided some value, as many people under lockdown need that tax relief, because if you apply this is money back in your pocket. So I really hope it was helpful, and please guys, remember to subscribe, like, comment down below about just any feedback that could just help the channel. As we are growing, I'm really looking to really provide as much value as possible. More videos like this are definitely coming. It just takes a little bit of time, so I really appreciate your guys' subscriptions, as it helps me a lot. So yeah guys, I really hope you learned something. See you on the next one.